What is going on, family? It is your boy, Lowedaddy, Lowstradamus, Lowrod, the Dollar Store TC, whatever way you want to chop it up, and whether you like me or you don't like me, somehow you can't get rid of me, because Humbl just had their earnings report yesterday, and a lot of y'all have been on my back for the past day or so to get something out there, let y'all know what the hell is going on with them. So we're going to do that today. Before we dive into that, as always, please, smash that like button, just smash that subscribe button, and ring the little bell next to it so that you get notified every single time we go live, every single time we drop videos, and we're making money up in here, which is every single day the stock market's open, folks. All right, with that being said, let's dive into it. So, really excited for this video also, as some of y'all know from the Discord. I did just publish version 3 of the Den of Due Diligence on my website today. As always, if you still don't know how to get to the Den of Due Diligence, don't be ashamed. I'll put a link somewhere over here. I've been pointing above my head, but there's nowhere to go above my head right now. So I'll put I'll put a link somewhere in here, and then there's always a link in the description below. But version 3, I think you're going to find to be much more useful. OTCs have been updated. I don't usually play around with OTCs, but this is still an OTC, so I had to. And then public, and I'll show you this change has been made to public as well. As you can see, I've already been playing around with it, but basically the big change is that up here, if you want to filter between annual and quarterly reports, now you can. So, some of y'all might find that useful. I think it's a pretty decent change. This is an annual report, so we're going to go there, but y'all can play around with that in your free time as well. I think that y'all like it. Let me know in the comments below. So, Humbl, TSNP, my TSNPeeps. Let's dive into it. I wish I had better news for y'all. Y'all promised me you weren't going to shoot the messenger, or as they say in the industry, don't shoot the numbers guy. Yeah, there's not a whole lot to go off of. This is why I don't play with OTCs. My methodology, you can't really value invest in the OTC market. These companies are some of the riskiest investments you can make in the market in general. We've talked about that before. The closer a company is priced to zero, the riskier it should be seen. I know even though they're $3 right now, they were at 17 cents like 2 months ago. And so far, I've been wrong. I told you I didn't think it was a good investment 2 months ago or 3 months ago, or actually this is shit, that was in December, so that's like 4 months ago now that they were at 17 cents. And I didn't think it was a good investment, and look at me now. Look who the big idiot is. And as I told you, I'm okay being an idiot as long as y'all make money. Just offering whatever guidance I can, just showing you how I see it. Um, yeah, I put these numbers in last night before I left, and when the market closed yesterday, it was at $2.90 a share. The previous day it had closed at 312, so of course there's going to be a big reaction after the earnings report when it drops by 20 cents. Market cap, you're looking at $2.8 billion at $2.90. Also, shitty thing about OTCs, the numbers will not update automatically. Google does not have an API that I can hook to my spreadsheet right now for the OTC marketplace. Anyway, moving on. As always, we'll get to these numbers last, but you're looking at their balance sheet here first, as always. The total assets last year increased from $7,000 to $1.8 million. Difference is just $1.8 million there, so that's good. The total liabilities last year increased by $161,000, so assets are growing quicker than that, so we're looking good there. Our debt to asset ratio, you're looking at a 0.14, which typically indicates a safer investment because it's being financed mostly on our shareholder equity. However, shareholder equity is so little here, it's like, it really doesn't matter. I wouldn't consider this to be a safe investment, and we can get to that as we move on. I think you'll kind of see it in my light, or I hope you do, as to why I wouldn't just go off of this for being a safe investment like we typically do with public companies. This also is not a public company still. It's OTC, which is technically unlisted. Now our current assets, we're looking at $1.8 million. They're all current. Our current liabilities are $244,000. So that's also all of our liabilities. Our current ratio, though, is 7.38, which typically indicates a very healthy level of liquidity. You always hear me drop the Berkshire Hathaway, model of they've got $500–600 million in assets to play around with. They can be close to 1.2. The smaller our assets are to work with, so 1.8 million is really small. We want this number to be, higher and higher and higher. 7.38 is fine for me. Total stockholder equity, that increased by $1.6 million last year. It was at negative $76,000 the year before. So we're heading in the right direction there. Everything's looking good. We do have $70 worth of preferred stockholder equity. $70, that's crazy. And then we've got a little under 1 billion outstanding shares. So I'm sure y'all can imagine what our numbers are going to look like above, but we'll keep going. Revenue, we don't really have anything to do with the income statements through 2020. They hadn't brought in a single dollar of revenue. You can't really run a successful business if you don't have any revenue, right? So they got to start making money for y'all quick. And y'all I'll explain later why that's even more important now after some announcements yesterday that y'all filled me in on. But no revenue, where we lost $713,000 in 2020. In 2019, we lost $281,000. So, we don't really have profit margins to go off of either, because you can't divide a number by 0, which is what their revenue is. So they're losing money. That's why they have to keep raising money. Not great information there. I know. Well, I wish I had better information for y'all. As always, you can see the report. Link is right here. This is what I was going off of. I looked all over the internet to see if these numbers were wrong. Maybe they had just forgot to put in thousands, so I could add 3 zeros to the end of them. These numbers are completely accurate. But again, they're an OTC for a reason. And I know they've got a CEO that everyone can get behind right now, which you'd love to see. But they got to start making some money quickly. All right, let's scroll up to the top here. So here's what we're seeing. The book value per share, the total stockholder equity, subtracting the $70 of preferred shareholder equity, and then dividing that outcome by outstanding shares gives us a book value per share of 16. It's like it's 0.0016. I don't even know how to say that. I've never thought about money that small in my life. That's not really what you want to see if you're holding these shares, but let's say that's okay. Let's forget about that number. Now the more important number that I look for there is the price to book ratio we're going to get. That's going to be our current stock price, $2.90 yesterday, and you're going to divide that by the book value per share of 0.0016. And that's going to give us, remember, we're looking for anything under 1.0 in true value investing. We're looking at anything for under 3.0 in Mike's value investing, because there's not a lot of growth priced in there. The PB ratio here is 1810.16, suggesting that this is certainly fully priced, definitely probably overvalued at the current price. Again, don't shoot the numbers, guy, but I'm just saying what I see. There are some things that we got yesterday of news. We did see that we had secured a $50 million bridge round of financing. We're not getting $50 million right now. Don't get excited. It's I think it's with Brighton, and it's a 3.3, or we're getting $3 million in cash, and they're getting a $3.3 million convertible note. So what that does is, it's not like we're just getting an investment and they love us so much that they're just going to invest in the company. It's they get $3 million, or we get $3 million in cash, they get $3.3 million already back. So they get like a immediate ROI there. That's probably why they did it. It's also coming with a 10% annual interest rate on that sum. So when you start paying back, that's why it's important that we start making money. What a convertible note is, that's different than a typical investment, is it's debt, right? They're loaning us that money, we need to pay it back, or they have the option to redeem $3.3 million worth of shares at $3.15 a pop. So worst case scenario is we don't make enough money quick enough, the interest starts burying the company alive, and the company is going to go belly up. They're going to file for Chapter 11 best case scenario, Chapter 7 second best case scenario, Chapter 5 worst case scenario. Now, in our best case scenario, there is the company turns things around in 2021. They can pay back that immediately, or they really turn things around and Brighton decides to execute that convertible note for $3.3 million worth of shares at $3.15 a pop, regardless of what the price is on that given day. That's why they went into the deal. Um, so, in that best case scenario, the share pool is going to get that much more shares, diluting the value of your shares by that much more. I don't know, what the numbers will look like at that point, but that's your best case scenario here with that. So, yeah. Um, there are a couple things that you guys told me they're coming out with this year that are just around the corner, and maybe in Q1 they made some money in revenue that hasn't been reflected on here. So let me know whenever they do drop their Q1 earnings report, and we can take a look at them again. But at this current price, y'all told me you wanted my raw opinions. You wouldn't get mad at me. You wouldn't shoot the numbers guy, and that you value my opinion because I do give it to you straight. And I don't. I still wouldn't invest in this company. I'm glad that y'all have made money so far. I'm glad that so far I've looked like a jackass. I've looked like an idiot. As I told y'all, if you're making money, I'll look like a jackass and an idiot all day long, every single day. But I wouldn't put my hard-earned money into this company until I really started to see things turn around. I'm okay not scooping stuff at the bottom. When they turn things around, I might hop on then, but I'll be cheering for y'all. I've always been in your corner. I'm always going to be cheering for y'all to make money here, make money in any investment, but I wouldn't invest in this company myself. So, with that being said, yeah, I don't really have anything else to give y'all, unfortunately. But I hope that y'all like the version 3 of the due diligence on my website. Go check it out. Again, link in the description below of how to get there. Um, that's all I've got today. So if you haven't already, please, 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 whether you like my opinion or not, smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every single time we drop new videos, every single time we go live, and we're making money up in here, which is every single day the stock market's open, folks, except for some days. And if you're really feeling generous, I would appreciate it if you could leave a comment below. Let me know your thoughts. Let me know which companies you want me to evaluate their earnings on next. And I'll continue to release new videos as long as I've got time to. And right now I've got time, which is beautiful. Until next time, y'all have a great rest of your day, a great rest of your evening, whatever time you're watching this at. Just have a great time in general. And spread some love. The world definitely needs it right now. So I will see y'all next time. Take care.